Are you tired of working hard for every dollar you earn? Imagine if your money worked for you instead, earning $1,000 every month without lifting a finger. Sound too good to be true? It's not. In this video, I'll show you exactly how dividend stocks can turn your dream of passive income into reality. Stick around, this might just change your financial future. Hi, I'm Ruhin, and welcome to America Finance. If building wealth, achieving financial freedom, or earning passive income excites you, you're in the right place. Today, we're diving into a step-by-step strategy for creating $1,000 per month in passive income using dividend stocks. Before we get started, hit that like button and subscribe for more tips on growing your wealth. Now, let's jump right in. 1. What are dividend stocks? Let's start with the basics. Dividend stocks are shares of companies that pay you a portion of their profits regularly, usually every quarter. It's like being rewarded just for owning a piece of the company. These payments are called dividends, and over time, they can become a steady source of income. Think of it as a paycheck that you didn't have to work for. 2. Why focus on dividend stocks? Dividend stocks are powerful because they provide regular income. Many companies increase their dividends over time, meaning your income grows without additional investment. You can reinvest dividends to buy more shares, creating a snowball effect. 3. The 1,000-month plan. Breaking it down. Now, here's the part you've been waiting for. How to build a portfolio that pays you $1,000 every month. 1. Set your goal. To earn $1,000 a month, or $12,000 a year, you need to determine how much you'll need to invest. Let's say the average dividend yield of your portfolio is 4%. You'd calculate $12,000 4% equals $300,000. This means you need a $300,000 portfolio to generate $12,000 annually at a 4% yield. Step 2. Choose the right stocks. Focus on companies with a history of consistent dividend payments, a payout ratio below 60% so they can sustain dividends, growing revenue, and strong fundamentals. Step 3. Start investing consistently. You don't need $300,000 upfront. Start with what you can, and add regularly. Platforms like Mention investing apps allow you to start with as little as $100. Step 4. Reinvest your dividends. Use a dividend reinvestment plan DRIP to automatically reinvest your earnings, buying more shares and compounding your returns. 4. Real-life example. Let's bring this to life with a quick example. You invest $10,000 in a stock with a 4% yield. That's $400 a year in dividends. By reinvesting those dividends and adding $500 a month, your portfolio can grow to $300,000 in about 15 to 20 years, depending on market conditions and dividend growth. This might sound slow, but the earlier you start, the sooner you'll reach your goal. The power of compounding is incredible. 5. Risks to consider. Of course, no investment is risk-free. Dividend stocks can decrease in value if the company faces challenges. Always diversify your portfolio to reduce risk. Monitor your investments periodically. Avoid chasing high yields, those can often indicate trouble. 6. Final tips. Here are a few quick tips to supercharge your strategy. Look into ETFs like Mention examples, which provide diversification and steady dividends. Use tax-advantaged accounts like an IRA to avoid paying taxes on dividends right away. Stay consistent. Even small, regular contributions make a big difference over time. 7. Visuals and graphics suggestions. A. Intro animation. Show an animated calendar flipping through months, with dollar signs stacking up as each month goes by. End the animation with 1,000 month prominently displayed. B. Explaining dividend basics. Display a simple chart showing how dividends are distributed, for example, company profits shareholders. Add a visual of dollar bills or coins dropping into a piggy bank labeled your account. See dividend growth example. Use a dynamic bar graph to show how reinvested dividends and regular contributions can grow a portfolio over time. Create a snowball rolling down a hill. getting bigger as it collects dividends. Beat real-life stock examples. Display logos of real dividend-paying companies like Coca-Cola, Procter & Gamble, or Johnson & Johnson. Highlight their dividend growth history with a simple line chart. Use risk section. Show a visual of a risk-o-meter moving from low to high. Display common red flags. High payout ratio, declining revenue, high yield alert. F. Final tips: create a checklist graphic, diversify your investments, use dividend ETFs, reinvest dividends, use tax-advantaged accounts. 8. Audience engagement tactics: ask for participation. What's your favorite dividend stock? Let me know in the comments. Are you new to investing? Type yes if you're just starting out, or no if you're a pro. Use personal stories. Share a quick anecdote about how you started investing in dividend stocks and the impact it's had on your life. Incorporate a giveaway. Want to kickstart your dividend journey? I'm giving away an investing book or $50 investment credit. Comment below to enter. 9. Call to action. So, there you have it, a complete roadmap to earning $1,000 per month in passive income with dividend stocks. It's not a get-rich-quick scheme, but with patience and discipline, it works. If you found this video helpful, don't forget to like, subscribe, and share it with someone who wants to build wealth too. Have questions or need help getting started? Drop a comment below. I'd love to hear from you. Thanks for watching, and I'll see you in the next video.